this is how I made $4,000 less than a month using this one strategy, and you don't want to miss it. So let's get right into this video right now, because I want to make sure that everybody who is a trader is wanting to be successful gets this down pat so you can be successful in the year of 2025. Let's go. So right here, I trade gold. Now, if you guys don't know, this strategy alone has made me $4,000 less than a month on the live account, okay? And what's really crazy and interesting is I would never thought in a million years that I would be trading gold, right? Now, it did happen fast and real quick. It happened when the tariffs just started. So the market started like pushing up really hard. And I was able to get that gain real quick. But I know for some of you guys think it's just supply and demand. It is supply and demand, but it's also something else too. And it's so amazing. And I'm going to show you based off of some of the indicators I use, and not like indicators where it's the MACD or RSI. I don't use none of that. Some of the indicators I use are EMAs. The EMAs is to help me know what's actually going on, okay? Now, let me show you how you can easily trade this strategy, and this strategy is a breakout strategy, okay? So I do have a 50 EMA right here, and you have a 13 EMA crossing, right? Now, I'm just giving you an example on here. This is probably not the cleanest setup, but I would say that this is a great example, especially if you are normally trading a certain strategy and then all of a sudden the markets just change up on you. And then you're trying to figure out, well, what else can I do? Well, you can trade at breakouts if you like, because sometimes breakouts would just go with no return. So let me go ahead and show you this clear example. All right. So you have technically right here on a 5-minute time frame, and you can do this on all time frame, guys. But the reason why I suggest a higher time frame is because the higher time frame usually, the reason why I suggest the 5-minute time frame is because the 5-minute time frame gives you a better RR. If the higher you go, the higher stop loss, and the higher your stop loss, the less you have to minimize your lot position. So if you want to keep a full position and doing a 5-minute time frame, I recommend a 5-minute time frame. Okay, so you see here that the market is touching this resistance zone, okay? Now, like I said, this strategy has really helped me, but you just got to pay attention, okay? So if you see, if I remove these first and I put the 200 EMA on, you can see that, of course, it's kind of in the range, right? The market's going below, then it's going up, and then it's going below, it's going up, right? But usually when the market is below the 200 EMA, lets you know that the market is selling, okay? If the market is above the 200 EMA, it usually know that the market is buying. But usually when the market is doing like this, it does not apply. This strategy does not apply to anything that's ranging or consolidating in the 200 EMA range like this. You want it to be under the 200 EMA just like this, okay? So now that we know that it is under the 200 EMA, let's go ahead and take this off and put this bad boy on. So after the 200 EMA, you see that the 13 EMA completely crosses, right? Now, around this time frame, I'm not really trading. I usually trade New York session from 7:30 a.m. all the way to 10:30 a.m. It's probably best that you do it around that time because more volatility is happening in the markets. So what do I see here? As you guys know that I trade supply and demand, but there's something else that I also do. Once I see that is underneath the 200 EMA and this bad boy has crossed over, right? What we could do is do two things, right? One, we can look at a supply zone, right? Which is right here. This is it's okay looking supply zone, and you can see how the market retested, right? But let's just say, hey, Jonah, I don't have time to look. I can't even look at the markets. I'm at work or I'm doing something with my family. Hey, no rush. Because even though you see that the market is below the 200 EMA, right? And what do you see? You see lower highs and lower lows. These lows are constantly being broken. And on top of that, you see this major one being broken. On top of that, you have the 13 EMA crossing the 50. All you have to do is look for a good break, right? So for example, if you see the 13 EMA cross, it would legitimately look like this. All right. So it didn't cross here just yet. So we wait, right? So right when it goes, you see when it crosses right there, right when it crossed right there, and you see that you see a bearish candle right here, that closed bearish. You don't want too much a wick, okay? We don't want these wicks over here. We don't want anything looking like this, okay? We want something looking like, we want more body than wicks, right? So this is usually more body than wicks, right? This is usually something like more body than wicks right here as well, okay? That's what you want, right? So delete this, and what your entry would be is literally right here, okay? Because it closed bearish. Now you can put your stop loss anywhere you desire. You can put it up here. You can put it down here, which is only 20 pip stop loss, but literally you can put it right here, right? And your desired take profit can be anywhere. If you're trying to catch liquidity, you're trying to catch these lows, right? These will be your liquidity down to the low right here. Let me go ahead and mark them up. I'm not sure how far this goes. I can't remember, but I would say that this does go pretty far. So your take profit would have been hit. You would have actually caught this whole move if you left a runner. So what I am saying with this one example is showing me, guys, that you don't always have to wait on the retest, okay? There was a lot more breakouts happening in the markets than they have been retests. I don't know completely why, but I believe that I'm suspicious of why I believe what's going on is because there are a lot of uncertainty happening in the markets, especially with these tariffs that is happening. And it's affecting gold and every single currency pair right now. So it's kind of hard for the market to just do a regular pullback because you have a lot of uncertainty happening in the markets right now. So this is one example that I'm going to show you about how you can make and maximize your profits without having to wait on a retest. And if you just constantly do this over and over again, it would definitely help you. Let's look at a buy example, okay? Now here's a really good buy example. And the reason why I say here's a really good buy example is because you have the EMAs crossing the 200, right? You have the 13 crossing 200, 50 crossing 200, and the market is above the 200 EMA. And remember when I said when the market is above the 200 EMA, it's doing what? It is buying. So let's go ahead and remove the 200 EMA, and let's just see where we could have gotten into these buys, right? So, or let's just leave the 200 EMA on so you guys can get a better, get better used to it, okay? So, even though it crossed up right here, we don't want to buy right here when the market, when it's below structure, okay? Now, you could, it's just more risky. You see how it just came back down, but it shot back up. We want to make sure that if it's above the 200 EMA and we're buying, we want it above the 200 EMA. So you see right when it crosses, right? Right when it crosses, let's see if we can go back just to here and see what happens. Okay, didn't cross just yet, it's just crossing. So right when it crosses, right there, and you have that bullish candle close bullish, you can literally enter here and put your stop loss right under here or right here. You know, you could easily put it right there and trade it to your desired position. Most people would trade to like a 101, meaning like you risk 1% to make 1%. Is all up to you, and the market just easily hits take profit, okay? And look, guys, this happens a lot, especially if you're trying to grab liquidity. It happens a lot because you have liquidity being grabbed. You have the market has this lower highs, lower lows, and then reversing to our higher highs and higher lows. And the reason for this being is because the market, it needs some type of pullback. Pullbacks are very healthy for the market, but once the market goes back up, especially on gold, it goes up. So this strategy is going to help boost your profits, you know, insanely crazy, right? But you have to be, as I would say, you have to be patient, okay? You can't just try to take every setup. Be patient. If the setup is not there, guys, do not trade it, okay? Do not trade these setups right here. Please don't trade these setups. This does nothing for you. Over here, all this does nothing for you, okay? It makes no sense to trade this because there's nothing to trade. All right, you're just going to be getting whipsawed, and then you're going to blame the markets, and then you're going to blame the strategy. Use it when the market is in momentum. Okay, so when the market is in momentum, that's when you want to use the breakout strategy. Okay, I hope this video was helpful for you. Definitely keep going back and back testing this strategy to see how you can trade breakouts with EMAs. And honestly, if you don't want to use EMAs, you could just do it with the trend. Okay, just look for the trend, look for a level, wait for a breakout, and then you can execute. So I hope this video was helpful. Please like and subscribe, and I'll see you guys in the next video. Peace.